Hello. So welcome to our next chapter. So as we are doing from our audited 100 pages, so our next chapter we've already done with all of these chapters. Our next chapter is your audit committee and corporate governance. Now this comes for approximately 4 marks for every attempt. So very important chapter to remember. And I have also made a summarized table in the end. So let's start with the chapter. So now this is approximately 47 pages in your ICI study module. So basically, what exactly is this chapter? So that is your corporate governance. So there are some things that every company has to follow that they have been set with. So corporate governance is a system by which the management of a business entity directs and controls the activities in the best interest of stakeholders. So they have to comply with certain regulations for their stakeholders. Stakeholders include your shareholders, your government, your customers, etc., everybody. Okay, so now your applicability of LODR regulation, that is to whom all of these are applicable. So listed entity who has listed any of the following designated security, that means not just shares, but there are some certain securities given. If any of these securities are listed on a recognized stock exchange, that is your RSE, then they have to follow your LODR regulations. So any specified security listed on the main board or SME exchange or innovators growth platform. Then any non-convertible securities, any securitized debt instruments, your IDR, that is your Indian Depository Receipts, any units issued by mutual fund, any security receipts, and any others as specified. If these are listed, then they have to follow LODR regulations. Okay, so starting with first, that is your audit committee. Your audit company is first of all applicable to every listed company. Every listed company has to have an audit committee. And for public company, if as per the last audited financial statement, so this is as per section 177 of the Companies Act. So any public company following the top limit, that is your turnover more than 100 crores, your outstanding loans, debentures and deposits more than 50 crores, and your paid up share capital more than 10 crores. In such a case, over here, just make a correction. This is equal to or more than, and over here it is only more than. Okay, so this is equal to or more than 100 crores and paid up share capital is equal to or more than 10 crores. Okay, now constitution. Constitution is basically, first of all, who all should be in your audit committee. So if it is a listed entity having OSSRES, what does this mean? Having outstanding special right equity shares. So if it is a listed entity which has outstanding special right equity shares, in such a case, the 100% of the members of the audit committee, that means all the members of the audit committee shall be your independent director. However, for other, that means if they do not have this, it is at least two-thirds of the members shall be independent director. When they say at least, that means if it comes in point, you will have to round up the number. Okay, so basically this is actually your main provision. And if they have special right equity shares, then 100%, that is all members shall be independent directors. Okay, now minimum 3 directors shall be members. 3 directors of the company shall be members of the audit committee. All members of the audit committee shall be able to read and understand financial statements. At least one member shall have accounting or related financial management expertise. And last is chairperson shall be your independent director. The chairperson of the audit committee shall be an independent director and shall be present at the AGM to answer any shareholder query. So this is a comparatively bigger chapter. It is covered in 8 pages on my notes. So just pay attention and keep moving forward. Okay, so now how frequently do they have to meet? The frequency is at least 4 times in a year. They have to meet at least 4 times in a year, which means 4 or more times in a year. And gap between two meetings, it is not that will not be allowed. If I do a meeting today, then do a meeting tomorrow, then day after, and the next day, so that I have done my 4 days. No, gap between two meetings is maximum 120 days. So any gap, so just doing 4 will not be, the gap between two meetings shall not exceed more than 120 days. Okay, now next is your quorum means your minimum number of people that are required for the meeting. So it is 2 members or one-third of the members, whichever is higher. 2 or 1/3 of the total members, whichever is higher. And minimum 2 independent directors shall be present in the quorum, otherwise quorum will not be constituted. Okay, now what are the powers? So I have given some powers. This is not a complete list. These are some illustrative. These are not exhaustive. So these are your mandatory powers. So investigate any activity within its terms, seek information from any employee, obtain outside legal advice, and last is your secure attendance of outsiders with relevant outsiders. Okay, now coming to the role and function. So I have tried to make a key that is over here. It is your PAVI QT. So approval for payment to stat auditors, approval to payment for stat auditors for any other service rendered. It is the audit committee that will be providing the approval. Oversight listed entities financial reporting process to ensure financial statements is correct, sufficient and credible. That means they will check the financial reporting process. Next is review functioning of whistleblower policy. We've already covered whistleblower policy. I hope everybody knows what it is. Next is recommend auditor appointment and remuneration. So they are the person who will be recommending the appointment and the remuneration, that what remuneration we will be paying to the auditor. Next is review auditor's report with management before submitting it to the board. Evaluate IFC and your risk management systems. Next is comment on the rationale, cost benefit and impact of merger, etc. on the entity and the shareholder. So if there is any merger happening, so you have to do why we did, that is your rationale, then your cost, the benefit and the impact of the merger, that is how it will affect you and your shareholders. Next is valuation of undertakings of or assets of undertaking. So either valuation of undertakings or the assets of the undertaking, this will also be done by them. Next is review quarterly and annual financial statements with management before submitting to the board. So it is they who will the review, that is the audit committee. Approval of any subsequent modification of transaction of listed entity with related party. So they are the person who will approve any modification to transaction if there is any transaction between the listed entity and the related party and there is any subsequent modification, so they will be the person who will provide approval. Next is your mandatory review of information by audit committee. That means these they have to mandatory review. So first is your, so the key is your is McDonald's MCD. Okay, so I stands for internal auditor. That means internal control weakness, internal auditor report. Next is your internal control weakness letter issued by stat auditor. So first is issued by your internal auditor, second is issued by your stat auditor. Next is management discussion and analysis of financial condition and result of operations. Appointment, removal and terms of remuneration of your CIA. CIA is your chief internal auditor. Last is your statement of deviation. So deviations, one is your quarterly statement of deviation, then second is your annual statement. So annual statement of funds utilized for purpose other than stated in prospectus. That means if I had raised money, if I had raised money in a prospectus for the reason that I want to expand my operations in another city, and if for some reason I did not use the money for this purpose, then I have to show that in the deviation report. Okay. Now coming to your next part, that is resignation of statutory auditor from listed entity and material subsidiary. So if your statutory auditor, remember if he resigns within 45 days from the end of the quarter of a financial year, if he resigns within 45 days from the end of the quarter, then he will still have to issue your limited review report for such quarter if he is done within 45 days from end of quarter. If he did it after 45 days from end of such quarter, if he's done after, then he has to issue your limited review report for the such quarter as well as next quarter. That means, boss, since you took more than 45 days, that means already 1.5 months has passed since my last quarter got over. So therefore you have to issue report for the last quarter as well as you have to issue for the next quarter as well. Therefore it is such quarter and next quarter both. And if the auditor has resigned, if the auditor has signed your limited review for first 3 quarters of the financial year, if he has signed your LR for the first 3 quarters, then even though he has resigned, he still has to issue limited review for the last quarter and the audit report for the financial year. He has to issue both of them. Okay. If there is any concern with management, that means non-availability of information, or if the management is not cooperating, which may hamper the audit process, auditor to approach the chairman of the audit committee. He can go to the he can go to the chairman of the audit committee and tell him his concerns. Next, if resignation is due to non-receipt of information, that means if he has he has resigned because the client was not giving him any information. Auditor to inform audit committee details of information sought, post which either the audit committee or the board of directors, that means if a company is not required to set up an audit committee, then in that case the board of directors to communicate its views to management and auditor. Okay, coming to your next part, that is role of auditor. Role of auditor in audit committee and certification of compliance of conditions of corporate governance. That is, what does the auditor have to do? So the statutory auditor shall be invited, that is when required, to the meetings of the audit committee. He will have right to be heard, but he will not have right to vote. He can only be right to heard, but he cannot vote, of course. Then next is auditor to document matters which are important in providing evidence to support certificate of actual findings. Of course, he is the person who will be giving them the other documentation. Okay, now your very important part that comes in this chapter is verification regarding composition of board. So there are some things that the auditor has to check, that is the composition of board is being followed or not. So first is at least half of the board of directors shall be non-executive directors. At least half of the board shall be non-executive directors. That means non-executive directors shall be half or more, whose age is less than 75 years. However, if the age is equal to or less than is equal to or greater than 75 years, in such a case, a special resolution needs to be passed and also a justification needs to be given that why we are appointing a person whose age is more than 75 years. At least 6 directors in board of directors. There should be at least 6 directors who are in the board of directors. This is for your top 2000 listed entities. Next is there should be at least one woman director. At least one woman director. Woman director is your independent woman director if it is the top 1000 listed entity. That means for top 1000 listed entities, the condition is not one woman director, the condition is one independent woman director. Okay, so this is for your top 1000 listed entity. I will also tell you why I have colored these different colors. So anything in green means you have to upper round off. Anything in blue, when we say top 2000, when we say top 1000, so top 2000, top 1000 when? So this is your market capitalization as at the end of the immediate previous financial year. That means immediate previous financial year, that means the previous year, the end of that financial year, that will be your on that date the market capitalization. And listed entity, what do you mean by listed entity? That means whose equity shares are listed on the stock exchange. Only and only if equity shares are listed. Okay, now your next part is at least half of board of directors shall be independent director. So first we did at least half of board of directors shall be NED. Now we are doing at least half of board of directors shall be independent directors. This is applicable to listed companies having outstanding special right equity share. Outstanding special right equity share. Next is your listed entity director or WTD MTD, that is your whole time director or your managing director. So a director of a listed entity can be director or independent director in max 7 listed entities, and he can be independent director in maximum 3 listed entities. So for the director, it is director or independent director max 7 listed entities, while for the whole-time director or your managing director, they can be independent director in maximum 3 listed entities. Okay, now coming to your next part, that is your chairperson. So if your chairperson is a non-executive director, and if he's a non-executive director, or if he's a not non-executive director. So in such a case, what I've done is, if your chairperson is special, that means if he is if he is the promoter, related to promoter, or occupies management's position at a BOD level. So that case I have termed it as special. So if he is special and he's a non-executive director. So if he is special and he is a non-executive director, in such a case, half of the board of directors shall be independent directors. So if the chairperson is special, that means he is a special person and he is a non-executive director, then half of the board of directors shall be independent directors. If the chairperson is special but he is not a non-executive director, that means he is other than non-executive director, in such a case also half of BOD shall be independent director. However, if he is not special, and he is a non-executive director, in such a case, it is 1/3 of BOD shall be independent directors. And while this is the same, again, half of BOD is independent director. So what you can say is, if the chairperson is a non-executive director and he is not special, only in that case it is 1/3 of BOD's independent directors. In all other cases, it is half of BOD is independent director. Okay. Now coming to your next part. So basically you only have to remember that it is 1/3 over here. Everywhere else it is only half. Next is examine annual disclosure submitted by board of directors. So they have to check whether the disclosure submitted by board of directors is correct or not, and also have to check the independence of the director. Next is independent non-executive director. That is, the independent non-executive director shall have no material pecuniary relationship with your company, holding, associate, subsidiary, promoter, or director. Okay, so that is your company, holding, associate, subsidiary, promoter, or director in current year plus 2 immediately previous year. So even in the current year and last 2 previous also, they should not have any pecuniary relationship. Who? That is your independent non-executive director shall not have any pecuniary relationship. Next is your independent director and relative. Independent director plus relative can own maximum 2% voting power in the listed entity. So that means me along with my relatives, I can maximum hold only 2% voting power. Next is appointment of person on board of directors requires shareholder approval. That means if any person is being appointed on the board of directors, you will definitely require shareholder approval, which is earlier of next general meeting or 3 months from appointment, whichever is earlier. So whenever the next general meeting is happening, or 3 months from the date you have appointed this person, whichever is earlier. Next is appointment of person earlier rejected by shareholders, done only with shareholders prior approval. That means if any person was appointed on the board of director but the shareholders rejected that person, and now you are appointing this person again, that means appointment of person earlier rejected by shareholders, done only with shareholders prior approval. Now if you want to appoint him, you will definitely need shareholders approval plus your explanation by the NRC, that is your Nomination and Remuneration Committee, as to why we want this person. Okay, so this was your part with regards to verification regarding composition of board. Now coming to your next part, that is your remuneration of director. Remuneration of director, there are some certain disclosure requirements. So all pecuniary relationships with non-executive director, criteria of making payment to non-executive director, that is the breakup. Then elements of remuneration package of individual directors. All of these you have to disclose. Details of fixed component and performance linked incentive. How much of the salary is fixed and how much is performance based. And plus performance criteria also. That means that what is the performance criteria on which you are paying them. Next is your service contract, notice period, severance fee, everything has to be disclosed. And last is your SOP details. So SOP is your stock option, that is your discount, accrual period, exercising period, all of this has to be disclosed. Okay. Now next is the approval. Approval is fees paid to non-executive director. This includes your independent director. Shall be recommended by BOD plus approval of shareholders in general meeting. So whatever fees you are paying, first of all, it needs to have BOD approval, and second, it also has to be approved by shareholders. Next is your uh, resolution to specify the limit, that is the maximum number of your stock options that can be granted. Next is if the annual remuneration is payable to one non-executive director, if annual remuneration payable to one non-executive director is greater than 50% of the total remuneration payable to all non-executive directors. That means if you are paying 1% too high, then the shareholder approval will be required every year. Next is no shareholder approval required for payment of sitting fees to non-executive director. Shareholder approval is not required in such a case, only and only for sitting fee payment. Fee to executive directors who are promoters. So that means they are also executive director and they are promoter. They require shareholder special resolution in general meeting. They require the shareholder special resolution approval in general meeting if the annual remuneration is greater than 5 crores or 2.5% of the net profit, whichever is higher. So whichever is higher. So 5 crore or 2.5% of net profit, whichever is higher. And when number of executive directors, when number of executive directors is greater than 1, then the aggregate annual remuneration to such EDs is greater than 5% of net profit. So this approval will be required when there are more than one executive director. That means it is greater than 1. And the aggregate annual remuneration payable to such executive directors is greater than 5% of net profit. In such a case, you will require shareholder special resolution. Okay. Auditor to ascertain from minutes of board meeting if remuneration of non-executive director has been approved by shareholders in general meeting. Next is examine report of board of directors on corporate governance. The board of directors also make a report, so the auditor has to check. So report on corporate governance and ascertain whether it discloses remuneration to directors and compensation to your non-executive directors, because all of this has to be disclosed in the report. Okay. Now next part is obligation with respect to employees, KMP, directors and promoter. So first of all, with regards to board, so the first board meeting shall be conducted within 30 days of incorporation, and instead of 30 days, it is 60 days. In case of IFSC public and private company, it is 60 days for them. Otherwise, for everybody, it is 30 days from incorporation. Next is board meeting shall be held at least 4 times a year, and maximum gap between two board meetings is 120 days. Next is section 8 company. For a section 8 company, they shall do one board meeting every 6 calendar months. Remember, over here it is every 6 calendar months, means from January to June is one set of 6 months, and July to December is your second set of 6 months. And for IFSC public and private company, it is one board meeting in each half of the calendar year. Your quorum, what should be your quorum? Your quorum is higher of 1/3 or 3, which should include your one independent director. So this is for your top 2000 listed entities. Okay, so this was everything with regards to board. Now next is with regards to directors. So member in maximum 10 committees. Now you know there are separate committees, like you have your audit committee, you have your nomination and remuneration committee. So there are separate committees. So director can be member in maximum 10 committees. And second is chairperson can be in maximum 5 committees. Okay, and these committees can only be your audit committee or your SRC. Okay, so SRC we will be studying forward, don't worry. Next is your ID shall be liable, that is your independent director shall be liable only for acts of omissions or commission by the listed entity which occurred with his knowledge. So your independent director will be liable only if he knew about these acts and he didn't do anything. Independent director to hold at least one meeting in financial year without non-independent directors and members of management. That means one meeting shall be held only and only by the independent director. There shall be no non-independent directors. Okay. Next with regards to your senior management. So senior management is your SM. So make disclosures to board relating to material, financial and commercial transactions where they have personal interest. So if the senior management have interest in any of the transactions that the company is entering in, if they have their personal interest, so they will have to disclose that they may have conflict with the interest of company. And second is no employee, director, promoter of listed entity. No employee, director, promoter, employee, director or promoter of the listed entity shall enter in agreement with shareholders or third party with respect to profit sharing in connection with dealings in security unless you have received the approval of your board of directors plus shareholders ordinary resolution. So they will not be allowed but only and only if they take approval from your board of directors and shareholder will they be allowed to enter into agreement with any profit sharing which is in connection with regards to securities. Okay, next is they also have to review compliance report of laws applicable to listed entity plus steps to rectify the non-compliance. Next is replace independent director who resigns. So if an independent director resigns, of course there will be his vacancy. So replace independent director who resigns or is removed by the board of directors within 3 months from date of vacancy. Okay. So earlier it was earlier it was a different amendment. Now it is only 3 months. Next, undertake director and officer insurance. So that is your D&O insurance for all its independent directors for sum assured and such risk as determined by your board of directors. So with this, we are done with this part, that is obligations with respect to employees, KMP, directors and promoters. Okay, coming to your next part, that is your vigil mechanism. So your vigil mechanism is to establish a whistleblower policy. We've come across this term a lot of times now. Whistleblower policy for directors and employees to report any genuine concerns. If you think that there is something wrong happening in the company, they have given you an option to raise your complaints via whistleblower. It should provide for adequate safeguard against victimization of director or employees and provide direct access to chairperson of the audit committee. That means the person who complains, he shall be properly protected. Therefore, it says against victimization. Okay. Next is details of such establishment of such mechanism to be disclosed on the website as well as the board report. So this has to be disclosed on the website and board report, both of them.